All right, we are live. So welcome back to Dapp University. So today we've got a lot to talk about in our live stream. The first thing we're going to check on is a crypto airdrop that just happened. So you might be eligible for some free money. I'm going to tell you how you can check for that in this video, and also how to look for some more opportunities in the future. We're going to look at that. We're going to look at a lot of other updates that have happened in this space since our live stream yesterday. Again, we do these live streams Monday through Friday on this channel. Just turn on notifications, subscribe. You're going to find out about this whenever you go live. We're going to check on the crypto markets, answer some of your questions, and a whole lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step by step, start to finish, then definitely head on over to dappuniversity.com/bootcamp to get started today. All right, so we got people jumping in the chat here. We got Cody, Above Realty, Automatic Beats, Tina, Eileen, Cyrus, Stefan, ENIAC, Jaya, Shubham, Ugandan Crypto Guru, Stoneboy, Venture Warrior, Jeff, Lex. Welcome. All right, so let's jump into this. Let's talk about the crypto airdrop that just went down, and how you could potentially be eligible for some free money, and also how you could be eligible for other airdrops in the future. Okay, so I've been talking about these a lot on my channel, especially throughout this kind of bear market they've been in, because it's one of the cool things about crypto is there's still all these opportunities out there, despite the fact that we're not in this frothy bull market where cryptocurrencies are going only up. Okay. And so basically, there's all these new projects that are launching that don't have tokens yet, that are incentivizing people to use those projects early, and then they airdrop these tokens retroactively to people who were early adopters to that technology. That's one of the coolest things about blockchain, is you can just go try some different tech out, okay, and then you can actually just get free money for doing that. It's like basically just get paid to use technology early. So we've seen this multiple times in the past. I've been a multi-time airdrop recipient from applications like Uniswap, 1inch Exchange, ENS, a whole lot more, okay? And, lately we've seen layer 2 scaling solutions like Optimism drop their airdrop token. And so the latest one to follow suit and do the exact same thing is a new NFT marketplace that has come onto the scene. Okay, we've talked about this. We've mentioned this project, I think, a couple times in our live streams previously. But if you haven't heard, but if you have used it, then SudoSwap, all right, is a new NFT marketplace that's come out that has just unveiled their governance token and retroactive airdrop. So let's get into the details of this to see how you might be eligible. So again, really quick take, SudoSwap. Let me just pull up this side on my screen here. So again, SudoSwap is an NFT marketplace. You can see it here. Obviously, if you're eligible for the airdrop, then you already know what SudoSwap is. But if you haven't heard of it, that's what it is. That's what it does. Okay, they're launching their Sudo token, and let's just see here. Anyways, it's a governance token, all right? So just like the other projects where essentially you have to be a token holder to be a part of the community that helps make business decisions for what's going to happen in the future for the project, okay? So the Sudo token will be used for governance of the marketplace. So the team is decentralizing their protocol to its community, something that typically involves a token for a crypto project. This is pretty common. This is what happened with ENS, basically. They launched the token so that you can do voting, essentially. Okay, so anyways, SudoSwap is an NFT with an automated market maker model. So it's pretty novel because it's similar to Uniswap in that way. It works slightly differently from other NFT marketplaces like OpenSea that you might be used to. So this model uses liquidity pools, okay, that basically lets people automatically swap between two assets. It doesn't work like OpenSea does, where essentially you're opening a bid and then other people are like filling those bids, okay? So anyways, on SudoSwap, any user can create an NFT pool from a particular collection paired with Ether, okay? So basically, the pool offers trade quotes that way, and sellers of NFTs can instantly swap them for Ether, vice versa. So anyways, the total supply of Sudo tokens will be 60 million, and a portion will be distributed as an airdrop to early contributors and holders of XMON tokens. We saw that. We'll see that here in a second. But basically, the real criteria for the airdrop, okay, is basically for being an early liquidity provider on the protocol, okay? So you can go check for eligibility over on the SudoSwap website, all right, to see how many tokens you would be eligible for. So We don't necessarily exactly know what the price is going to be, okay, but we do see the details of the token distribution. Again, the price of the cryptocurrency is known whenever it actually hits the marketplace. People ask me all the time, like, where does the price of a cryptocurrency come from? Some people have the misconception that it's like programmed into the cryptocurrency somehow. That's not how it works. So basically, the market determines the price. So with these new tokens, what happens is typically they go get listed on a excuse me, decentralized exchange or DEX first, like Uniswap, for example. And basically what happens is the first person to provide tokens to the liquidity the liquidity pool sets the price. So basically they put in an equal share of 2 tokens to the pool that basically where they kind of guess what the price is, and then the market sets it. Like if they think that the price is too high, they'll start selling it. If they think that price is too low, they'll start buying it. And then in the initial phase, it can get really out of whack because there's hardly any liquidity, and the market's so brand new that the prices just go absolutely nuts. But anyways, so that's when you'll find out basically how much actual money you're going to get in terms of US dollar terms, but you can see the idea of token distribution, and then how much you would get, like if you were a liquidity provider, for example. You could see that type of thing right here. It'd be 1% of the total supply. So basically, it's between the XMON holders and then also the pseudo swap AMM liquidity providers. Okay, that's the 2 major eligibility criteria for this particular airdrop. So, if that wasn't you, okay, if you did not participate in this, you're not eligible, that's okay. There's lots of other opportunities coming up. Some of these are guesses at the end of the day, but there's some pretty good guesses, okay? So pretty much any major, project out there that doesn't have a clear revenue model, or even if it does have a clear revenue model but wants to move towards decentralization and is not very decentralized right now, is probably going to have a token, okay? So what are some really easy, dead simple places to look? Well, I think the Ethereum Layer 2 ecosystem is sort of a no-brainer right now, okay? There's so much going on in that space, especially with the Arbitrum ecosystem, okay? Because Optimism already has a token. Arbitrum does not have a token yet. We don't know what the plans are going to be for Arbitrum 1 to have a token, okay? But, they did have their Arbitrum Odyssey, which they paused, okay? That will, my understanding is that is going to resume, okay? And there's probably going to be a significant amount of airdrops associated with that. So this looks like the other stuff where basically you're just going in and using new projects early, okay? And then trying to position yourself for that eligibility. So start to think about what are some key functions of those applications, like providing liquidity to a protocol, which would make you eligible for that type of thing. Okay, so definitely check out Arbitrum. We haven't confirmed that Arbitrum is going to have a token, like I was saying, but probably. Okay, probably. And then other applications on top of that ecosystem is also another important thing. Let's say you've got apps that are unique to the Arbitrum ecosystem. That's a high likelihood that those would have tokens as well. So, yesterday we also talked about ZK Sync. Layer 2 scaling solution. The mainnet is going live for ZK Sync 2.0 in a really short amount of time. Let's just see here. In less than 60 days now. Let's just pull it up. So 59 days. That's let's see here. 56 days to ZK Sync 2.0 on mainnet. All right. So basically, that's going to be not too much longer after the Ethereum merge, which we'll talk about here in a minute. And we've seen, on ZK Sync's website, the FAQ section, like, are you going to have a token? And the answer is basically just yes. Like, they don't give any details on how it's going to be distributed, but that's kind of a no-brainer. They're going to do it. And so, that'd be another opportunity to potentially get some free tokens as well. So anyways, that's the latest airdrop. If you didn't get involved in that, that's okay. There's lots of opportunities coming up down the pike. So let's talk about a couple of the things that happened in the space. Let's look at what's going on with the crypto prices. Let me pull this up here. So we've seen a little bit of green on the crypto charts today after a streak of red, after a streak of green. So So Bitcoin's gotten back above $20,000. Ether's back above $1,600. We were below 20K on Bitcoin again. Okay, ETH is we were dipping back down to the 1400s over the weekend. So we've seen a little bit of green on the charts here. Let's take a look at some sort of what the word on the street for some possible recovery here is. So let me just pull this up here. So one of the biggest sort of macro factors people are talking about right now is the U.S. jobs report that just came out. Okay, so why does this matter to crypto? Okay, you might think, hey, this is off topic. Like, you know what I mean? Like, how, why are we talking about the economy here? Well, the broader economy is one of the biggest factors that's, affecting what's going on with cryptocurrency prices for major cryptocurrencies like Bitcoin, Ethereum, and like mid caps. Like, of course, way deep down in the crypto ocean. Okay, if you look at past 7-day gains, you're gonna find, this is just on page 1, I believe, but if you go to much smaller ecosystems, like let's just look at smaller ecosystems. You're going to find stuff, especially like over an Arbitrum ecosystem, GMX, like I was talking about a minute ago. Arbitrum ecosystem is, we definitely have projects on there that are doing well. Balancer and GMX both, Balancers across ecosystem, but GMX is an Arbitrum project. Anyways, so back on track, got a little distracted there. The broader economy is definitely one of the biggest things plaguing crypto markets all year. So why do we keep talking about it? Again, I don't pretend to be a macroeconomics expert by any stretch of the imagination, but it doesn't take a genius to see that, the inflation's a problem, that the Fed has been trying to fight inflation, that raising interest rates, changing economic policy has basically, we hit a brick wall, essentially. Everything did at the end of last year. Stock market's been down, crypto's been down, everything's kind of been headed in the same direction. So, what's going on with this report that just came out today, and how could that impact the conversation? Okay, because we're similarly seeing some green on the charts today in the stock market as well. Okay, this is very correlated to what's happened across major cryptos like, Bitcoin, or ETH over the past, 7 days. Let's just look here. Yeah, very correlated. Okay, so anyways, so what is this? So the jobs report just came out. All right, and that's sort of what the word on the street is. So let's look at that. Why is it important? So in non-farm payrolls, okay, this is basically the job report. This is a technical category when you're talking about measuring economic data. Basically, we're talking about the numbers that came out where. Let me just pull it up here. I'm going to pull up the exact numbers because this report doesn't have it. Let's see. It's the CoinDesk article I was looking at didn't actually have the real numbers here. Okay, so here it is. So basically, the broad view is it is a solid jobs report. Okay, so the data eased fears that the hotter labor market would give the Federal Reserve leeway to get more aggressive with its rate hikes. So basically, the expectation for the jobs report was 318,000. from the Dow Jones estimate. Some estimates were even higher than this, and the jobs that were added to the economy were slightly less than that. So why does the market like that news? Okay, so the jobs report is basically talking about new jobs that were added. Okay, and so people were expecting a certain number. This was less. All right. So why is less jobs good news for financial markets? Why do markets interpret it that way? Okay. So like, you had the big bad, Fed that everybody's sort of like, worried about, sort of like, don't fight the Fed. Again, that's, we changed monetary policy, we hit a brick wall, and we kind of been down only in pretty much all markets since then. The real estate market's getting kind of shaky too. So, the Fed has two concerns. It basically has the concern of inflation, keeping prices stable, and then also, maintaining maximum employment. Okay, so the fear of we've been in an inflationary time, which a lot of that's got to do with supply issues, but Fed is trying to essentially help curb inflation with demand side of things, because again, prices are a function of supply and demand. And so if you have supply chain issues and shortages and all this type of stuff, and then issues with trade across countries, that really affects the supply of things. And if the demand stays the same, then the prices go up, okay, which essentially causes inflation. I realize that adding extra money to the economy also is a huge part of the equation here, but we're looking at a simple thing here. That's one side of the thing. The other side is demand. So essentially, the whole idea is if the labor market's running super hot and we have all these people getting jobs, getting more money and going out and spending it in the economy, that's a bad thing for inflation. Okay, so if the jobs report came in like double people's expectations, you'd probably see an absolute dump in the markets today. Okay, but it came in slightly less, which they interpret as good news. So why is that good news to the markets at least? Well, that basically looks like that mitigates the fear that you're going to have all these people that are just piling into the the job market and then getting all this money and spending it. That's the whole idea. Is you have more money, you have more earning potential. You're spending it in the economy, which further adds gasoline to the inflation that's going on right now. So the Fed's goal is to try to reduce inflation, and adding way more jobs would increase inflation. And so that's how people are perceiving this news, is that's what's going to happen. So taking that one step further, the question is, how are we doing with inflation? Okay. Has inflation peaked? Is the worst behind us? So as we see more data come in about that, we're sort of waiting to see, is the Fed going to ease financial conditions? Are we going to stop? Are we going to lower interest rates, or at least a step in the right direction would be, reducing rate hikes? Okay. So, we've been increasing the rate hikes from 25 basis points to 50 basis points to 75 basis points. If the jobs report came in low, is there a chance that we would get a reduced rate hike the next time? Or maybe just no hike, you know what I mean? So that's kind of what markets are looking for. And ultimately, they're looking for a Fed pivot, which would be sort of another about face back towards conditions of easing. So every little positive, step in the right direction kind of gets people excited. And I think that's one big reason we're seeing green today in the crypto markets. Also, the stock markets, again, these are highly correlated. So whenever you see things really going in the same direction, there's typically some sort of macroeconomic catalyst that's getting people excited or scared. This is a double-edged sword. The door swings both ways. Let's see here. Man, my camera's now doing that thing again. I was thinking that like keeping things darker for the live streams would help the light, maybe help that issue, but the camera's got pretty good low light performance. It just started doing this weird thing. Okay. So let's look at people fighting in the chat here. So let's look at one other thing that happened yesterday. So we did have another exploit in the DeFi space. Okay, so we'll go over that. I don't have all the details in this yet. This literally just came across my screen as I was about to jump on this morning. So I'm going to look at the details literally. We'll just analyze this live together. So DeFi exchange KyberSwap suffers a 265,000 front-end exploit. Okay, so there's this is the co-founder says this is the first time the project had been hacked in 5 years. So if you're not familiar with Kyber, it's an exchange. It actually is a pretty early OG DeFi exchange. Okay, so they have been around for quite some time, and I've never really heard of anything bad going down at Kyber. So I think I'm gonna side with them on that one. Let's just see here. Let me just pull it up here. So on Friday, the Kyber network, the liquidity protocol in which KyberSwap is built, confirmed reports that the attack on its website was quickly identified and fixed within a few hours. So this was a short-lived thing. Again, this only lost about $265,000. Again, that's nothing to something to turn your nose up at, right? But it does pale in comparison to the billion-dollar DeFi exploits that we've seen in the space. So this doesn't look like a massive issue, but I mean it still sucks. So let's look at what happened. So they saw a suspicious element on the front end. They shut down their front end and were conducting investigations. So basically, that's crazy. They identified a malicious code in Google Tag Manager, okay, and immediately disabled it. So if you're not familiar with what that is, like Google Tag Manager is a piece of JavaScript code that you add in your website, so that you can basically easily add other like tracking codes through a dashboard. So like, let's say that you wanted to run ads on a platform like let's say Google AdSense or excuse me, like YouTube ads or Facebook ads. I don't know why this camera keeps doing that. We'll just have to deal with the dark, moody camera until maybe if I adjust my light. If I turn this on. I don't really like having this light on if I can help it, but oh well, we'll just have to deal with that. So anyways, if you're running like ads on multiple platforms, the whole idea is you can put a single piece of JavaScript on your page, and then through a dashboard, you can like basically add other JavaScript, snippets to your site. And so it looks like somebody took advantage of that and put some malicious JavaScript into their Google Tag Manager. At least that's what I'm like referencing from this article here. So that does look like a security vulnerability for sure. Okay, so definitely watch out for that. If you're doing any kind of tracking on your Web 3.0 application, just know that if you use Google Tag Manager, that could potentially be a point of failure. There's lots of things that could be point of failures. I mean, NPM is definitely a point of failure for some projects. Especially if you have a malicious package that gets injected into there somehow. So the thieves were able to compromise the app's front end through Google Tag Manager. The injective So basically, the hackers made users approve their funds. Okay, so this is an approval hack. So basically, if you're trading ERC20 tokens on a decentralized finance application or depositing them for whatever reason, then you have to approve those tokens before you can deposit them, okay, before you can do any kind of trade. So the approval message just basically says like, hey, I'm going to let somebody else spend tokens on my behalf, okay? So in this case, it looks like the attacker just let them sign an approval message to approve the hacker's address to spend their tokens rather than the application's address to spend their tokens. And so that was essentially how they were able to transfer funds out of their wallet. So, how can you protect yourself from this type of situation? Well, basically, if you're a developer, definitely watch out for malicious JavaScript that gets injected into your website. If you are a user, then anytime that you sign an approval message, number one, make sure you know what you're signing. So know who the sender is that you're signing an approval message for. I know it can be pretty easy to just like confirm and click things, all right, on a website, but you need to actually check to see what the message is, to see who the recipient is and confirm that it is actually the contracts that you intend to interact with. And then also when you're doing approvals for tokens, like only approve the amount that like you're gonna use, okay? So like you don't want to be approving like all your tokens on a website, okay? Like, yeah, that's bad. Like some people will just do like infinite approvals. They'll just be like, okay, I want to trade USDC and I know I'm going to do this multiple times and I want to save on gas or just want to save time. And so I'll just approve like infinity tokens, right? Or, a large number. But the problem with that is if you do that, then somebody could completely clean you out. So here's the attacker's address. Here's the token balance. There's not that many transactions, only a few. So it looks like they got a hold of this pretty quickly. But yeah, here's the funds that were compromised. No blind clicking for sure. So how do they inject something like that? So again, it's like from Google Tag Manager. So Google Tag Manager is a script that lets you run other scripts on your website. And so I'm not sure how they got access to their Google Tag Manager. Maybe they, were able to convince them that they had tracking code that they wanted or something like that through another vendor. I'm not sure. Maybe they hacked something else. You know what I mean? Maybe they're able to hack into their, Google account to get their Google Tag Manager and then put that on their website, which would make it a lot easier to do rather than like hack their, rather than like hack their GitHub and change the code or like hack their continuous deployment operation or something like that. You know what I mean? That'd be much more suspect. That'd be a lot easier to catch rather than, just getting into their Google account or something like that and then updating it. So I don't know exactly. I don't know how they got access to their Google Tag Manager, whether it was by some other means, or if they did some sort of phishing thing or they pretended to be somebody else. I don't know. But that's how they injected the code. There's a lot of sites like OpenSea do infinite. Yeah. Somebody says camera was hacked. So let's see here. Somebody says they're trying to hack YouTube creators. So watch what? I don't see a link. I'm not sure if y'all are able to post links in the YouTube chat. If there's a link that you were wanting me to check out for sure, then maybe just go send it to me on Twitter. Like, so I usually post on Twitter. I post my live videos on Twitter, so you don't follow me on Twitter. Also, if there's up to the second stuff that you want to find out about, you can go follow me on there. But if there's a link to something you want me to watch out for, then just go reply to this latest tweet that I put out where I announced the live stream, and I'll check out the link. As a Solidity developer, is it required to read the Ethereum white paper? Absolutely not. Although, it's not a bad thing to do. It's just there's a lot to know, and and honestly, like if you're a developer, like probably the more beneficial white paper would be the yellow paper. But you don't have to do that type of stuff. I mean, you can, like I said, it'd be beneficial at some point, but the more value would be to just, you know, build something. All right, everybody. So that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so the more people learn about blockchain. And if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? You can go to my YouTube homepage. You can find those free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you'll take a master's shortcut entirely, I share a master blockchain step-by-step start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. Help people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching Dapp University.